Millions of digital data packets, gigabytes of downloads, thousands of voice minutes stream continuously from upstream network systems into the billing architecture. To a network engineer, this volume of data represents successful service delivery. To a corporate finance department, a raw megabyte cannot be processed. In its raw state, it carries no debit, no credit, and no ledger routing. Finance requires a clean, balanced dual-entry ledger. Every usage event must eventually map to an open receivable against the customer and an offsetting revenue posting in the general ledger. Bridging the gap between raw network bytes and that strict dual-entry ledger requires an automated translation engine capable of applying financial context in milliseconds. In the SAP BRIM architecture, this translation happens inside convergent invoicing, or CI. The core mechanism driving this translation is the billable item type, or bit type. It is the specific identifier of a sign's financial meaning to a raw network event. The overarching journey looks like this. A data packet enters CI and absorbs accounting attributes defined by the bit type. It gets grouped during the billing phase and is finally posted to the FICA subledger during invoicing. The bit type is the primary attribute carrier, connecting operational metrics to hard financial data. A bit type cannot function in a vacuum. It sits at the bottom of a strict three-tier configuration hierarchy. At the top is the billable item class, or bit class. This layer generates the technical database structures and defines exactly which fields are available to store the incoming data. Below the class is the subprocess. This controls data segmentation and determines how individual items will be grouped together. Finally, the bit type itself is assigned to the subprocess. This dictates the actual business significance, differentiating a one-time activation fee from a recurring monthly charge. This diagram shows key elements of a billable item. The top row illustrates how subprocess, bit class, and bit type align. Below, specific service mapping show a data subprocess assigning to an internet bit type and a telecommunications subprocess assigning to a mobile bit type. This rigid hierarchy ensures every piece of incoming usage data lands in a predetermined structural home before any accounting calculations occur. With the database structure set, the system needs the accounting parameters required for the FICA subledger. SAP manages this using main and subtransactions. These are internal configuration codes that tell the system exactly how to route debits and credits. The system uses a mapping matrix. It reads the incoming subprocess and bit type as inputs, outputting a specific debit and credit transaction pair. A usage charge and a recurring charge on the exact same contract will automatically route down completely separate accounting paths. The bit type governs the automated accounting logic for every individual transaction passing through the system. This transaction mapping is physically maintained within Convergent Invoicing's account assignment settings. Specifically, the subprocess and bit type parameters are defined in system posting areas, typically posting area 8121 and 8122. To create highly granular routing rules, up to 4 external key fields can be added alongside the subprocess and bit type within these posting areas. By parameterizing these posting areas, SAP can process millions of highly varied billable items simultaneously, entirely eliminating manual intervention and hard-coded workarounds. Once items are configured with their transaction codes, they move into the billing process. The primary objective of billing is to reduce the sheer volume of individual items by aggregating them based on shared key elements. This text slide outlines the billing process aims, highlighting that one criterion for aggregation is the same source transaction type. If standard concepts are insufficient, the system aggregates based on customer-specific Z fields, added directly to the bit class. Aggregation drastically reduces the data payload, making it manageable for the system, without losing the financial routing instructions attached to the bit type. The final execution phase is the invoicing process. Invoicing consumes the aggregated billing documents to generate the actual FICA posting document. As the billing document passes through, FICA executes the final general ledger account determination based on the main and subtransactions assigned in configuration. The FICA module doesn't look back at the raw event. It relies on the refined payload delivered by CI. Invoicing is the exact moment an operational event officially becomes a recognized financial obligation. We can verify this architectural journey by looking at its physical database reality. The first critical table is DFKKOP. This table stores the business partner line items, representing the open receivable against the customer. The second is DFKKOPK, which stores the general ledger line items, representing the offsetting revenue, tax, or even discount entries. Every entry in these two tables traces directly back to the original bit type and subprocess configuration mapped at the beginning of the data pipeline. By engineering the bit type at the start, we ensure an automated, high-volume subledger posting that is technically reconciled with the upstream source.